All right, today we're doing something a little different. We're going to perform a corporate autopsy, and our subject is United Food Holdings. We're using their very own financial report as our scalpel to figure out what happened here. Let's dig in and see what it looks like when a company's vital signs just completely flatline.
And bam, right away, we hit the central mystery. I mean, it's a question that just doesn't make sense, right? A company that's on a stock exchange, it has assets, it has debts, a whole board of directors, and yet it reports literally zero revenue, not one single dollar. How on earth is that even possible?
Oh, but it gets so much worse. It's not just that they didn't make any money, they were actively losing it. We're talking a net loss of almost 2.2 million yuan in just half a year. So this isn't a company that's just treading water, it is actively sinking. So, what is going on here? Okay, to solve this whole zero revenue puzzle, we've got to look at how the company is structuring its books. See, the answer isn't that the business vanished into thin air, it's that it was moved. And it all boils down to one very specific accounting term. And here's that term, discontinued operation. Think of it like this. When you decide you're going to sell your house, you start treating it differently, right? You stop planning that big kitchen renovation and you just start thinking of it as this separate thing you need to offload. Well, a company does the exact same thing with a piece of its business it wants to get rid of. All the money stuff related to it gets put in a separate box away from the main operations. And here's what that looks like for United Food. The continuing operations, which is basically the official company now, is really just an empty shell. It has zero revenue, and it's losing almost 1 million yuan just on administrative costs. Meanwhile, all the actual businesses, the parts that are supposed to make money, have been shuffled over into discontinued operations, where they also lost over 1 million yuan. So the main takeaway here is that the company has been totally hollowed out, with all its important parts just sitting in a box marked for sale.
A company doesn't just wake up one day in this state. This is a story of a lot of failures and a lot of warnings that go back years. To really get what happened, we have to follow this trail of red flags that were waving the whole time.
And this, right here, might just be the biggest, reddest flag an investor can possibly see. See, an auditor's job is to check the company's finances and say, yep, this looks fair and accurate. But a disclaimer of opinion? That is the worst possible outcome. It means the auditors couldn't find enough evidence to even form an opinion. It's basically the financial version of a doctor looking at you and saying, I have no idea what's wrong with you, your charts are a complete mess. And why couldn't they form an opinion? Well, the reasons are just staggering. They couldn't get the company's banks to confirm anything. They couldn't even be sure the bank statements they were given were real. They had no way to verify if a huge acquisition the company made was actually worth what they said it was. And they had massive questions about sales, purchases, and whether the company could ever get back the huge amounts of money it was owed. Any one of these is a huge problem. All of them together, it's a picture of total financial chaos. And a huge piece of that chaos was this one failed acquisition. Back in 2018, the company dropped 120 million won on these new businesses. They came with a promise, a warranty, to deliver 25 million in profit every single year. Well, that promise was broken for 3 straight years. And guess what? These are the exact same failed businesses that are now sitting in that for sale box. Just a massive failed bet. But that bad acquisition wasn't the only leak in the ship. The company also got into another deal where they put down this huge deposit and loan to a company called SST, with a plan to eventually buy them. Well, that deal fell apart too. And the price tag for that failed deal? A mind-blowing 82 million yuan. After their demand letters were just ignored, the company had to just give up. They wrote the entire amount off as a loss, another giant hole blown in the balance sheet. So, with the finances in total ruin and the business basically in purgatory, the pressure inside the company just reached a boiling point. The boardroom, the one place that's supposed to steer the ship, it became a battlefield. Now we're hearing directly from a board member, Professor Ling, who's sounding the alarm. He's warning about going concern and liquidity issues. That's just boardroom talk for the very real risk that the company could literally run out of money to pay its bills and just cease to exist. He says they don't even have a basic cash flow forecast for the next year. That's like trying to sail through a hurricane without a map or a compass. And his warnings just get more and more specific. He figures they need up to 2 million Singapore dollars, like right now, just to pay their bills. Staff salaries? Already late. The main shareholders? They're not putting in any more money to help. And because there's no internal auditor, there's nobody even trying to fix the broken systems that the external auditors were already screaming about.
Professor Ling is also thinking about the regular shareholders who are just trapped in this mess. He's saying it's completely unacceptable that management is dragging its feet on giving them an exit offer, some way for investors to get anything back for their shares. But they're pushing that deadline all the way out to the end of 2025.
Then another board member, Mr. Cheng, just lays out the total collapse of the company's basic functions in the starkest terms possible. The company has no auditor, no internal auditor, no legal counsel, and no company secretary. The whole corporate body has no immune system left. It's completely vulnerable.
And this is the final blow. When a member of the board, someone whose actual legal duty is to look out for the company, publicly states they are voting against approving the financial results, that is the ultimate vote of no confidence. It's a signal from the inside saying, don't believe these numbers.
So after that trail of red flags, those catastrophic losses, and a complete meltdown in the boardroom, what's the final verdict? What happens when a public company just stops functioning?
Well, the consequence is pretty definitive. The Singapore Stock Exchange has seen enough. It has officially told the company it's getting delisted. This is it. This is the end of the line for United Food as a company you can trade on the stock market. The market has made its final judgment.
So what's next for the shareholders who are left holding the bag? Well, the stock exchange is forcing the company to give them a fair and reasonable exit offer. To figure out what that is, they have to hire an independent financial advisor. But, and you can't make this up, in a final, almost darkly funny twist, the report says the company is stuck waiting for the bank to approve the payment for the advisor's fees. Even the process of shutting down is stuck in financial gridlock.
And that just leaves us with this one last big question. When a company is this completely hollowed out, what could a fair and reasonable offer even look like? It seems that in the anatomy of a corporate collapse, the investors are often the very last people anyone's thinking about.